Morning, Steve in Chicago with the morning grain comments. While markets are higher in the bean complex, putting a little premium back into the markets because of the dry Argentina weather forecast and dry southern Brazil forecast. We are looking at numbers as far as Argentina is concerned, potential crop of 44 to 50 million tons versus the government's 49.5. Brazil estimates are 151 to 160. USDA is at 152. China deactivated its COVID monitoring tracking app, but cases of COVID continues to increase. Corn market, the markets and wheat are probably adding a little bit of premium because of the weekend Russian attacks on the Odessa port. It's kind of uncertain that there's going to be any future attacks, and it does slow down some of the exports. We're also noting that as far as Russia is concerned, bad weather and slow inspections of vessels is keeping Russian exports lower than expected. We got corn exports down 32% from last year. Logistics are beginning to improve a little bit, but we're looking at no Brazil export offers beyond January. Argentina crop could be as low as 43 million tons versus USDA's 55. We also note that in the second week, much colder weather in the U.S. Midwest. I doubt if there's any winter kill, but wheat might be adding a little premium to that. And Argentina crop probably 12 million tons, export 6.5 versus 16.5 last year. So funds right now long about 100,000 beans, 98 meal, 60 oil, 130 corn, and short 46 wheat. Dalian soybean and soybean meal futures were lower, while palm and soybean oil were higher, and the Motif rapeseed made new lows for 2022. So again, choppy trade going into the end of the year. A lot of people have closed their books. Traders are not willing to take positions at the end of the year, and just when we start new in January, we'll be looking at the Fed interest rate actions. We'll be looking at the U.S. dollar. We're looking at demand into China. We're looking at the Ukraine war, South American weather, and beginning to think about U.S. 2023 weather.